All right, good afternoon, everybody. We're speaking with Greg Schwake, North Hero Trading FX. Greg's going to give us some information on what he's seeing in the FX market. How's it going, Greg?
How are you, Mike? Everything's fine right now. We are waiting for the minutes this afternoon. It is August, as everyone knows. It's pretty quiet. Most of Europe and the United States is on vacation, so we can chat about a few different things, I guess.
Yeah, exactly. You know, it's interesting. It seems like it's been pretty quiet the past few days, but we've seen a decent move lower in the dollar, especially against the euro, over the past few days. Any thoughts on what's really caused that?
I think people got way over their skis in the long dollar positions, and a lot of the long dollar positions happened as a result of dollar emergers. People really piled into dollar EM currencies last week, as we spoke about many times. There was a huge capitulation in dollar Turkey and dollar Rand that brought some of the other dollar emerging markets up. So as a result of that, you saw there was piling in of dollars. People bought dollars against some of these other currencies and have since reversed those positions. If you remember, I think it was last week or the week before, you had that big downdraft in euro through that big support 115.10. It happened in Asia when the news came out that a lot of European banks had exposure to Turkey. So the inverse relationship between euro dollar and dollar Turkey really took over the markets. And since then, dollar Turkey has been pretty quiet. They still haven't released Pastor Brunson, and we still have some some sanctions on a few of their officials. But it is a week of holidays in Turkey this week, and it's pretty quiet. A dollar turkey's been in a range of 600 to 620, give or take a figure or two on either side of that.
Yeah, well,
Uh,
you point out a good point there about euro because it sounds like about a week and a half ago when everything was happening with Turkey, everybody was looking at a European exposure, bank exposure, and so for the first time, we really saw some euro selling versus the crosses: euro yen, euro Swiss, euro dollar, and I brought up the chart on the right hand side, and it shows about a week and a half ago we moved down from about 116 where we are right now down to below to the low 113 handle, and then over the past few days have rallied back.
and also on Friday, and the notes of the campaign dinner from Trump, where he made some comments about the dollar and interest rates with respect to Powell and the Fed. That came out only Monday, and I think it happened on a Friday night on a fundraiser in the Hamptons. So everyone was wondering on Monday why interest rates were so much lower. You almost think that someone got wind of that, and interest rates were pushed lower as a result of that. So you ask why the euros moved up. You have a combination of factors. One, predominantly EM has stabilized, and two, you had some comments about interest rate by the president. I also think last night the dollar sold off across the board after Cohen and Manafort got convicted. Manafort got convicted on a few counts, but on Cohen having a plea arrangement. So I can't imagine that's good for the dollar either. So that's the environment we are in. Even though it is August, we are getting these one-off events. Every day there's some kind of headline, whether it's about China tariffs or a situation, the political situation that the president has himself in right now, uh, or NAFTA headlines. That was a big comment last night that came out and
Yeah, tell me about
indicated.
that. Tell me about you saw the comments and what did you take from them, and what was the trade based on that in the very short term?
Sure. Last night I actually was getting ready to go to bed and shut off my computer stuff at home, and Political came out with a story, and I posted it right away on your website. So anyone who was logged on last night saw it ahead of time. Is Political came out and said that they have a handshake agreement with respect to the main terms of NAFTA. So dollar Mexico was trading around 1893, and in Asia it went down to 1880, and Europe took it a little lower to 1875-ish. And then on the flip side, this morning there was another headline that came out from the U.S. Trade Organization administration that they were still very far apart. We've been hearing for weeks now that we should expect something any day now. But remember something, I think CNBC came out with a piece I posted on the Opportunistic Trader as well this morning, that we still haven't included Canada in this agreement. I still think that needs to be done, and U.S. Congress wants to see that done as well. So if you want to know a little bit more about the fine points of it, read that story I posted on the website. That'll fill you in there.
Yeah, so I actually just brought up a 10-minute chart for everybody to see of dollar mex, and you can see last night at roughly 10 o'clock on the button, we dropped from 1895, and then at 11:30 we're trading at 1875. So that's roughly a 1% move on that news. And then in Asia, or I'm sorry, at 5 a.m. we fully retraced that and more. So it was a full round trip from Asia on the headlines, and then moving back in London time zone.
That's what I love about some of these EM pairs. If you follow the stories and you're clued in on what is driving these currencies, you can get a 1% move in a few hours, and then reverse that 1% the way back. That could take a few days to happen in some of the major currencies. That's why if you're really clued in, I think the opportunities there are tremendous compared to some of the others.
Yeah, absolutely. It's a good point what you're saying there. EM especially, I mean, just look at dollar Turkey. You were just mentioning how the past few days have been quiet in like a 20 big figure range, but we were seeing, 5-10% moves last week, 20% moves at times.
Yeah, and then you take dollar South Africa. There's a lot of talk in the press about the government confiscating land of the white farmers. That's been a story that really was the downfall of Zimbabwe. And that's something to really keep an eye on when the government confiscates land of its people. And dollar South Africa has had a 1.5% move lower today. So just that happened today, not with respect to anything that happened with the farmers, but I think just the general positive tone of our equity market rebounded nicely off the Cohen plea deal lows that happened late in the day yesterday. And I also think you guys covered it on the website. There was a pretty big market on close order, correct?
Yeah, yesterday. It was about $1.5 billion at one point. I think about that.
Well, I mean, I always like to, we've spoke about this many times. I always like to have my finger on the pulse of what the flavor of the day or the flavor of the week on each currency is. And I like to really follow the story of each currency. As we mentioned, dollar Mexico, it's all about NAFTA. And with dollar Mexico and with respect to NAFTA, you can also trade dollar Canada with that. If they get, it's positive Canada if they definitely get looped into the whole agreement. That's something you've got to watch there. So that's the story for Mexico, let's say, that I'm watching.
I just brought up a chart of dollar rand because you brought it up before. Take us back about 8 or 9 days when in Asia it had a ridiculous move from, I'm just looking at the chart here, from like 14.5 up to 16 or so. And that was in the heat of that dollar Turkey kind of EM blow up period. But that's a crazy move.
Yes, when one emerging market really falters and people worry, then they also think, then other investors in other markets question the soundness of the positions they have, and they really scramble and panic. I mean, a lot of times you hear what drives market. It's greed and fear. And in something like that, fear really took over, and people reached to cover positions that were some crazy levels when you look. And then when calmness comes back to the market, it settles down at more realistic levels.
Yeah, it was definitely a pretty chaotic time. So let's take a look at where we are right now. Like you mentioned, the dollar has been, everybody's been longing the dollar. The dollar's weakened over the past few days. We got the FOMC minutes coming out in about 45 minutes, and then Jackson Hole coming out on Friday. What's the kind of trade you're looking at based on the minutes, possibly, and then into Jackson Hole?
Well, some of the concerns and the things I'm looking at apply to the minutes, which are in about 45 minutes, as well as with with Powell's speech in Jackson Hole. We're looking for anything that upsets the apple cart with the path of slow and gradual raising of interest rates. What could it be? I think one of the Fed governors, and I think it was Bostic, mentioned that they have an eye on what's going on with tariffs and trade. That's one thing I'm definitely going to be looking at for both the minutes and for Powell's speech on Friday. So trade is important. Do they warn? And is the warning great enough to maybe stop the gradual tightening? I personally think no. We still don't know enough about trade yet to really, for that to change the trajectory of rates. The other thing is, a lot of people keep talking about the flatness of the yield curve. If you can get a 3-year CD at 3% and 2.83% 10-year, some might say at certain parts it's almost inverted. So that's something that a lot of Fed governors and a lot of market participants are scratching their head, because you really don't see any signs of a recession coming with an inverted yield curve. I truly believe, and I explained this to a young intern the other day, you have negative interest rates and very low longer-term rates all over the world. And with respect to globalization, a lot of that money can now leave those countries and can buy our longer end. Our longer end is very attractive, and I think that's really holding down the longer end of our yield curve. And then the final thing I'm going to be looking at is what does the Fed think the neutral rate is? I think Kaplan touched on this the other day. What is the neutral rate? What are they trying to get to? What's neutral for them?
Yeah, that's a good question.
I mean, 2.5 to 2.75%, is that the neutral rate? We still got a ways to go if that's the case.
Well, on that note, so today is August 22nd. I think that the Fed is expected to raise rates 2 more times this year. What's in store for next year? Right now, from what you're reading from the different bank
research. You put me a little bit on the spot. I'm more concerned in the next couple months. I haven't really looked out that far, but we can always.
I think that the consensus is something in the range of 3 hikes right now for next year. So we got 2 more priced in for the rest of this year, and then in the ballpark of 2 to 4 right now. But I'm seeing a lot of 3 to 4 sort of thing. And like you said, I think that's really key, is if Fed governors start to whisper about tariffs really throwing a wrench in growth and then throwing a wrench in future hike prospects.
Yeah, for sure, Mike. But we still, I think it's way too early. If you noticed the other day, Secretary Ross has delayed the auto tariffs. And we don't know if something was agreed behind the scenes. I doubt it. But that's been delayed. So we don't know if they're more complicated on the U.S.'s side to implicate all this. To implement all of this. But I'm not sure.
Implement, a lot of that going around right now.
Yeah, yeah, exactly. So I think it's way too early to talk about trade. What's interesting is, and we personally have spoken about this, is there's some big sentiment indicators that are rolling over when you look at some of our data. The ISM this past month rolled over. The Philly Fed rolled over. The housing number today wasn't that good. That's definitely something to keep an eye on. And so that's whether our data is rolling over. And the big thing, which we keep mentioning, is trade. Trade is huge. Do our trade partners take a real firm tact here with Trump in this certain environment? We don't know. The speech on Friday The title of it is Changing Market Structure and the Implications of Monetary Policy. That can he can go a lot of different ways with that. And the official schedule isn't out till tomorrow night at 8 p.m. We know that Pelosi from Canada will be there. He's always a great central banker to listen to. And we wonder if some other central bankers will be there. But that's really all I'm focusing on there, Mike.
What about, let me get you on one other thing here. Dollar yen. What are your thoughts on the price action over the past few months? We just traded below 110 2 nights ago, and now here we are at 110.62. And that said, the rebound hasn't really happened on yields rising. And at the same time, when we were going down, it wasn't so much on yields. It wasn't really following yields so much. And at the same time, I get the sense it's not even following risk so much. If you take a look at the dollar yen chart versus S&P, they look nothing alike. So what are your thoughts there?
The correlation used to be excellent with respect to the 10-year interest rate and dollar yen. The correlation has broken down tremendously. It still does trade a little bit with risk on and risk off. If you noticed yesterday afternoon when the stock sold off very aggressively between 4 and 7 o'clock p.m. New York time, dollar yen did trade from 40.45 level down to 06, and now it's rebounded. So I think it's trading. I have to check the correlations. I haven't done that with respect to dollar yen because the correlations haven't been great, and it's really hasn't been a great trade. And that's part of the reason I've been focusing on other currencies that you really can put your finger on the reason they're moving a little easier than dollar yen.
Yeah, good stuff. All right, so hey, keep us updated at 2 o'clock Eastern. We have the Fed minutes, and then I think we have ECB minutes tomorrow, and then we have Jackson Hole coming up on Friday.
Thanks, Mike. I have a question for you from all the people that you've spoken with. What is the general sense of market implications of Manafort and the Cohen situation?
Well, it's funny. I posted a few different things today in the chat from a lot of different really smart people that I read and speak to. And, I think it's very limited because, what's really going to come out of this, it's going to be some gridlock. But even if the worst in terms of, let's say, Trump is impeached, we still move on to Mike Pence, who has a lot of these sort of same views. And it doesn't shake a whole lot up. We're still trade is the number one factor. It sounds like more so than anything political. Political, the algos and a lot of different people are moving off that, and a lot of head fake in the markets. But I think from what I'm hearing, trade is the number one mover of the markets right now.
But if his power or his agenda is weakened, you have to think that he can be less aggressive with tariffs and trade. That would be a positive, but then his other agenda for some of these other things might get lessened a little bit as well, which probably won't be that great for the economy.
Yeah, I mean, look, when it comes down to it, it's not a positive when the President of the United States is under scrutiny of these sorts of magnitude. That said, just look at the wall of worry. The S&P were at pretty much all-time highs. NASDAQ's pretty much all-time highs. Yields are lower, but I think that's reflecting, if anything, still U.S. is the safe haven despite what's happening with the President of the United States.
Yeah. It's definitely an interesting time for markets, and part of the thing I love about the website and Opportunistic Trader is themes are always changing all the time, and that's why it's so important to be clued in on what's driving the markets.
Absolutely, and it's been an interesting year. Starting with February VIX, the big increase, and then their commodities have had a big sell-off. Yields have had some decent moves, and we're getting into the part right here: September, October, November, December, which is typically the most active parts of the year. So there's going to be some great opportunities, and stay tuned because we have a lot of great, interesting people that have very strong views and are very connected, and so we're going to be given a lot of great information as those sort of events unfold.
Okay. Before I go, I just want to mention one other thing to keep an eye on for the rest of the day is the low-level meetings with respect to China are happening today and tomorrow. You might get a statement this afternoon. And a lot of times these statements get leaked out between 5 and 7 p.m. So if you're around, keep an eye on that. Thanks a lot, Mike. And if you have any questions, feel free to ask me on the website. I'm in front of my screens a lot.
Yeah, you definitely are. All right, thanks, Greg. We'll talk to you soon.
Have a great night. Take care.